The other day I was sorting through my email and I saw this message from some guy from a blog, and he was just furious. And he said, "I'm so tired of all the BS in Forex. This whole industry is completely BS. All these magic secret systems, nothing really works. I might as well just throw a dart at a magic dartboard that says buy or sell." Well, I think that a lot of people can relate to that just because of the frustration that's involved in learning to trade. If you haven't learned to trade yet, that can be frustrating. If you want to play Mozart on the violin, you haven't learned to play yet, that can be a little bit frustrating. If you want to design some kind of a new software application, you haven't really learned computer programming yet, well, that could be frustrating. So you either give up or keep on learning and practicing. Well, you already know that it's true that another reason it can be so frustrating is because of all the garbage that's being sold as Forex trading courses and trading strategies. I've seen so much ridiculous crap being sold on Forex. I've met so many people who have wasted thousands of dollars on Forex training courses, alerts, robots, ebooks, live seminars, software, you name it. I've watched some of the videos put out by these big name Forex gurus, and when you see what they're doing, I wonder how anyone can not tell that these guys don't actually trade the market and they don't know how to trade. Well, on the one hand, I'm actually kind of pleased and amused when I hear people say that it's impossible to make Forex trading work, because I know this is not for everyone. And really negative or unmotivated people are naturally going to be weeded out. But on the other hand, I really feel for all these people who have invested so much time and money into learning how to trade Forex, only to have their hopes and dreams stomped on by these Forex gurus who don't really care whether anyone actually gets results from their methods. As long as the gurus and the brokers and the software vendors and the robot salesmen are able to keep selling their garbage to sincere people who are willing to do what it takes and looking for legitimate answers, they don't seem to care whether or not people really get results.
One thing that's very popular in Forex trading is the use of pivot points or pivot lines. And whenever the market is moving up in an impulsive manner, it will go through all of the pivot lines. When it's moving down in an impulsive manner, it will go through all the pivot lines. So even though there are many times when the market does seem to stop right at pivot lines here and there, a lot of times it's not stopping. It's stopping completely in the exact middle between any pivot lines, not stopping anywhere near a pivot line. But then there are times when it seems to be hesitating or stopping at pivot lines, and because of that, it can become very fascinating. And things that are fascinating in trading, well, they can actually be distracting and keep you from focusing in on what really works, like what determines the beginning of an impulsive movement and the end of an impulsive movement. It's not the pivot lines that determine that. Another thing that is very popular in Forex trading is the use of trend lines. And when you connect the highs in a down movement, or you connect the lows in an up movement, it forms a trend line. And so a lot of times the trend line is broken and the movement down is not over. And when there is a trend, it may or may not form any trend line at all. Here's an uptrend. The most recent trend line is broken and the market keeps going up. Here you can draw many trend lines in both directions, and it pretty much doesn't tell you anything. A lot of times when the market is moving in one direction, it may form a trend line. The trend line doesn't exist until there are really three lows that have already respected the same line. After there are three lows that have respected the same line, then it's unlikely that it's going to keep respecting the same line. So the idea that when there's a trend line, it's going to keep on being respected, the more times that a trend line has been respected, the more likely it is that it's going to be broken the next time. It can be very fascinating to look at trend lines and how the market respects them, but may not be the most relevant thing to tell you when to enter a trade, when to exit a trade, and why? Would you enter a trade because in the future, 3 lows later, a trend line might be formed? Would you enter a trade because a trend line is broken? Very often, no matter where you draw the trend line, it's often going to be broken and the market keeps going in the same direction, and that's not really what's the most relevant thing. Another thing that's very popular in Forex trading is the use of oscillator-type indicators. Well, there are different ways you can use oscillator-type indicators, but if you were to sell when there is a bearish reversal in the overbought zone, well, this would definitely not work on this chart. Now you can adjust the settings of the indicator. You can make it slower, and you can go to a different time frame. One thing that you'll notice is that whenever you see a trend in the market, the oscillator will reverse at the very beginning of the trend, depending on what time frame you're looking at, what setting you have. So that's not a good sign to sell, and it's also not a good sign to exit. Now, if you adjust the settings of an indicator and you adjust the time frame that you're looking at, you can get it to work a little bit better, but it still may not be the thing that you most want to focus on. Elliott wave is a very fascinating way of studying the market, and like many insights that have been discovered about the market, once a trader becomes interested in this, it becomes more and more fascinating because the trader does see that the market does continually unfold in a type of Elliott wave pattern. But the way that Elliott wave is used actually can decrease winning trades and it can increase losing trades. For instance, you're always looking at the market and counting these waves, and I see, okay, there's 1, 2, 3, 4, 5, 6, 7. Now there should be a correction. A. Oh no, now the trend just continues up. So what we have discovered is that there are constantly slight distortions of pattern. And with just about any pattern that you can see on a chart, there are almost always multiple possible outcomes of that pattern. So if you're placing a bet on which one you think is correct, your chances of winning could be reduced to 50% or less. So here are 3 no BS trading principles that can help you to see through a lot of the garbage that's out there in the Forex trading industry. This can help you to save a lot of time and frustration, separate yourself from the herd of people who are consistently losing, and enable you to focus on what really works in trading. Number 1, trading Forex or any other financial market is not a trick or a formula. There seems to be a prevailing belief in the Forex trading industry that the way to trade Forex is to learn the latest trick, and whenever this indicator does this or whenever this crosses this, you get in. Well, how do you build a beautiful custom home? Is the trick to hit nails with a hammer? Is that how you build a beautiful custom home? Or is there more to it than that? Because this is how most traders look at trading. They're looking for some kind of a method. What's the method for building a beautiful custom home? Is it hitting nails with a hammer, or is there a complete holistic approach that includes the designing, the site preparation, the foundation? Is building a custom home about plumbing? Is it about electrical wiring? These are some of the things that are involved. And in the same way, trading is not a trick. It's not a certain indicator doing something. How do you play beautiful music of Mozart on the violin? Well, maybe you got an ebook off the internet that says the way you do it is to rub the bow against the strings. Obviously, there's more to it than that. Playing beautiful music on the violin is not a trick, and it isn't just rubbing the bow on the strings. Now, I believe that anyone can learn to trade Forex successfully, but it's just not necessarily a trick or a one-step formula trading strategy. The second no BS trading principle that many traders who have gone through our training program consider to be a revolutionary breakthrough is that financial markets are organic rather than mechanical. A good way to instantly prove this is to look at a chart. Here's the current chart of the pound versus the yen on the 15-minute time frame. Here's the current chart of the euro versus the yen on the 15-minute time frame. Nothing mechanical going on here. It's purely organic. And here's the current chart of the pound versus the US dollar. Look carefully. Look at all the charts. Look at all the time frames. And you will immediately see that financial markets are organic and they do not behave like machines. People tend to project mechanical qualities onto the financial markets. They want the market to behave like a machine. Even the term technical analysis implies a type of engineering science. But a financial market is a living, breathing, organic entity, and a trading method should be designed to capitalize on the natural patterns and cycles of this organic, living entity. Imagine if a team of engineers went into a forest or an organic garden and started to develop formulas and lagging indicators to determine when and where a tomato will form. Even though many brilliant, intelligent people may be involved in this project, it is possible that there is a more common sense and practical way to get the results of harvesting a tomato. You might notice that whenever a small yellow blossom forms, it's likely to turn into a tomato, and it's a different phenomenon from a new stem or leaf. Now, you don't need to start measuring the stems and counting the leaves and trying to project how far the next stem will go before a tomato will form, and so on and so forth. Most traders, once they see a trade forming, once they see a tomato forming, it's the size of a marble, they just snatch it off the plant. And they say, well, you never know. You never know how far it's going to go, so you better just get it right now. Well, there is a way to tell when a tomato is ready to be harvested. There is a way to tell when a trend is coming to an end. And there is a distinct phenomenon that shows you when to get into a trade right at the beginning of a trend and how to exit a trade right at the end of a trend. Once you stop looking at all the technical analysis strategies you've been taught before, and you see how to capitalize on the organic cycles of the market, you may be amazed at how your account starts to suddenly grow. Trading is less like engineering and more like playing football. Football players do plan what they're going to do, but there's no way for them to go out on the field and say, what we're going to do is run over to the left side of the field and intercept the ball as the quarterback throws it over there. The quarterback may throw the ball to 2 or 3 different people, and those people may be in many different places on the field at the time that happens, and that's not known until after it happens. Trading is really less like mathematics and more like kung fu. In kung fu, you can certainly develop your skill over many years to be a master at the practice of kung fu, but it would be impossible for you to go out to a kung fu sparring match and say, I'm going to walk over to my opponent, and after 45 seconds I'm going to suddenly duck, and then I'm going to kick over 45 degrees to the right and jump up, and I'm going to block a punch with my left hand. None of that stuff is planned. It's all done by reaction. Trading is a skill. It takes time, patience, practice, discipline, personal development, motivation, and a positive attitude. I believe that anyone who really chooses to and follows through with the intention can learn to master the art and science of trading.